Welcome to the Real Estate PB&J Hour on Money Talk 1310 and 100.9 FM. Rose and Womble Realtor Paul Fuqua is here to share market facts, the fundamentals of selling, buying, owning, and improving your home, plus interesting experts. Now, here is Paul.
Well, good afternoon, folks. Welcome to the Real Estate PB&J Hour. That's peanut butter and jelly. There's nothing more fundamental in the American spirit and way than peanut butter and jelly. You know, I'm going to run an informal poll. How many of you like strawberry jelly or grape jelly in your PB&J? So you can call in and give us answers. We'll report back on this in 2 weeks. In the meantime, I want to make certain everybody understands that the purpose of our show is to discuss the elements of home selling, buying, maintenance, and improvement, especially on your home, because it's, in many instances, it's one of the largest investments you'll ever make in your lifetime. And some people have made that investment numerous times. Some people have lived in the same property for decades. I have a good neighbor who bought the house as it was being constructed, and he's now 43 years into ownership, and he's maintained it assiduously and made improvements. And I would put it up against any house that was built in the past 6 years in terms of its sustainability and the treatment and the actual construction method used. To educate you and to let you know who I am, I'm Paul Fuqua. I'm a full-time professional realtor, and I've had the opportunity to help hundreds and hundreds of people both buy and sell houses in this area. And my co-host today, I'm very pleased, is Kim Pimento, broker at Rose and Womble Realty. She's been on the show at least twice before and was so impressive that I've asked her back, and I hope that she'll be able to come back more often than not. She's also far smarter than I am and far better looking. How are you, Kim? You doing well today?
I'm doing very well, Paul. Thank you for that introduction. That was great.
Well, I have to do it because today in the papers and on the news, all the news surrounding our industry is bad, and we're here to somewhat dispel that and to explain what's happening. We want to concentrate on the changing market. We want to concentrate on the effect of increases in the mortgage interest rates, as is being bandied about on the media. And we have a special guest today who is very knowledgeable about homeowners insurance, which can be a key element in your life if and when you have any kind of a problem with a piece of property. This show is all about the fundamentals of real estate and what you can do to maximize your ownership. And if you'd like to talk to me or to Kim or any of our guests, you can call us direct, 757-497-1310. I'm going to repeat that, 757-497-1310. At some point in time during the show, we'll give out our private numbers if you want to communicate off air. But in the meantime, let's talk about what's happening in the market today. Kim Pimento.
Oh, boy. Well, interest rates. That's always interesting to everybody.
I'm going to say this right off the bat. I am so sick and tired of hearing these bemoans and the moaning and groaning and the predictions of catastrophe when these interest rates, although they are higher than they were, are still nowhere near where they've peaked in years past. So what we have to look at is what can be done, and how we can still go about buying or selling a house.
Right. Yeah. Well, it's hard for people to understand that we can't have free money loans the rest of our lives. 2%. Banks have to eat too. Anyway, okay.
No, the banks don't have to eat. The bankers have to eat. Okay. Remember, people, they sell money. They're not doing it because they're humanitarians. They're doing it because they make a living doing it. Money is a commodity. It's like lettuce. All right? It's just like lettuce. They sell it. And if they can't sell it because the rates are higher, they're going to find another way to mollify the need or the effect of higher rates. Go ahead.
The commodity you chose was lettuce.
Well, it's green.
Yes.
So's money.
Okay. All right. So here we go. Non-conforming, which that is actually a jumbo loan. Unless anybody out there, I think you can use those two things together. So the non-conforming or jumbo loan is 6.5% with 0 points.
Okay.
All right, here we go into the conforming 30-year, 6.625% with paying 2.625 points.
Okay, remember, what are the points? Points are
1% of the loan amount.
Yeah.
Which buys down your interest rate.
Right. So if you have a $200,000 loan and they're paying 2 points to buy down the interest rate, that 2 points represents $4,000.
Right. Okay. Correct.
We're going to talk about why those points are where they are right now in a little bit.
All right. And then we have the conforming investment, which this one kind of shocked me. I didn't think it was bad as I expected it to be. 25% down, 5.575% with 2.875 points.
That's going to throw some investors out of the ballpark more than homeowners.
Well, I didn't expect it to be 5.75.
Right, especially with 25% down.
Yeah. So FHA 5.625 with 1 point, and then the VA 5.75 with 0.625 points. 0.625 points. I know, I almost said that wrong, didn't I?
Can you imagine? Well, I've seen that, 6 points.
There could be wrecks outside.
Yes.
No, it's VA 5.75% with paying 0.625 points.
Is my audience, is our audience, is the American public getting sick and tired of hearing about mortgage rate increases? Do you think?
Yes.
Yeah. Why? Why are they tired of it? Because it's a straw man, as far as I'm concerned.
Right. Well, it's one of those non-negotiables, really.
Yeah.
I mean, it's either you pay to have a lower rate, or you put up with what it is, hold on to it, and refi later.
And as a matter, that's a great segue, because I was in a conversation yesterday with a muckety-muck at a mortgage company, and I asked him why are the points so high today. He said, well, basically, Wall Street, who invests in mortgages, is making the bet or taking the giving you the money, and they're protecting themselves by charging those points up front, because they know rates are going to come back to a slightly lower level and without points, and they're going to refi. So they've paid their money up front, and they've gotten their money up front for that acquisition, and so to protect themselves when they get refied. And the same people who, some of you may have bought a house at 5%, and 2.5-3 years later, it was down to 2.67, I think is what I did. And my gracious, the savings to me was significant, but the guy who invested in that loan, bought it from the mortgage company, he basically took a hit. So now they're looking to get that money up front. Anyway, sorry, go ahead.
I agree. All right, so here comes the market update. So there's big jumps in the mortgage interest rate, which we found out already. And then there's slight improvement on the on-market housing supply, combined with continuing strong demand on keeping home prices high throughout the national and right here in Hampton Roads. So this week, the National Association of Realtors stated existing home sales fell for the third straight month in April to a seasonally adjusted annual rate of 5.61 million. Sales were down 2.4% from the prior month and 5.9% from over 1 year ago. NAR's report on existing home sales for May 22 will be released next week on Tuesday, June 21st. Can't wait, 10 a.m. Eastern.
Yeah, you know, we're dealing with old stats, because they're going to be coming up on June 21st of the stats for May. But now locally, our stats are a little better.
Yeah, we can get a little bit better, quicker information locally. And nationally, year over year, the sales price of existing single-family homes has increased. This is across the U.S. by 9.3%, from $373,000 to $402,000. They're rounded numbers, of course. And the new listings are outpacing new contract signings based on reports which came out yesterday. New contracts signed during the past 4 weeks decreased by 13.3% on a year-over-year basis, while new pending listings were down by 19.5% from 1 year ago. And that's huge, which keeps us strong in the price range, because demand is high and inventory is low.
Okay, folks, if these statistics are confusing, and I know I find them to be sometimes, especially late in the evening when I'm slightly tired, remember, you can call us now at 757-497-1310, live and on the air. That's 757-497-1310 to ask any question. Also, we are on YouTube. All the shows that have been cached there under the Real Estate PB&J Hour, and you can listen to us on your computer at SavvyTalk1310.com. Let's go back to the latest stats for the area right here in Hampton Roads.
All right, so this one, this fresh out off some of the stats we gathered just today, and I think they're interesting. Overall, on Hampton Roads, which we include the South Side Peninsula and Eastern North Carolina, the average absorption rate at the beginning of June was 1.12 months, and that's all the way up until about the $2 million mark, and I think it goes up to about 3 months. But still, to think that only 1.1 month supply of homes up to $1.5 million is a pretty low inventory across the board. Just remember, folks, what the absorption rate is, and we do this every week because some of you are new listeners, and some of you have the kind of memory that I have that lets stuff like that go. The absorption rate is how long it would take to sell every house that's on the market as of this moment without there being any new listings. So we could conceivably sell all 3,000 whatever that are on the active market right now in 1.12 months and have zero inventory. Well, actually, there is 3,436 listings on the market right now, so that means that we could have that many sales in the next 1.5 months. Yeah, and with no new listings, boom, we're done. And that's up 7.8% from in April. So we are seeing more things come on the market. Contracts ratified in May were 3,075. Actually, closed May was 3,125, which is up about 13.4% from April. So we're seeing more closings in May. We probably sold those, though, in March. Yeah, that, folks, we give you that information because there's always confusion about what constitutes a contract that's ratified and a contract that's closed. Do you want to go in to touch that a little bit? Ratification versus closing? Right. Ratification is when all parties have come together, all contingencies have been removed, and we agree to go to the closing table. So that means that there's no more outs. We've signed it. Everybody's signed, sealed, delivered. To the closing table is when we actually transfer money and transfer a deed. Right. I was asked the other day at a cocktail party, what constitutes the actual consummation of a real estate sale? And it goes back into the old English way of doing business. And what constitutes the consummation is actually the delivery of the deed and the delivery of possession, which is the key. Mm-hmm. So if you are dealing with a buyer and your attorney sends the deed over and then you send the key over, in essence the deal is done. Then no money's been exchanged. So what we do, or what I do, and I know my other colleagues in Rosen & Womble in many instances do, is if we're representing a seller, we show up at the closing when the buyers are signing, if we represent the selling partners, selling component of the transaction, and deliver the key upon receipt of a signed document that says this is done. And you know where that word deed came from? No. In England, back in the day when they were transferring properties, sometimes it wouldn't be for money, it would be for other things. So sometimes it would be for a deed. So I would go to your house and do a little jig, and that would be my deed. Come on, And after I did that, that would be my house. No. Yeah, that's what it was. Sure, it was. Look that up in the history. That's how you do a deed for something. Dino. Well, maybe I'd bring you some chickens. I don't know, but I would do a deed for you. All right, let's. What's the sales price to list price ratio? Do we have that? I do. Just remember. So the sales price to list price ratio remains under about 102% over sales price across the board in Hampton Roads, which is pretty good. We still have homes out there that are sitting on the market for a little bit. It's not. Some people say that when you have a home that's sometimes not pristine or not priced, there's that fine line between the homes that are in good shape, decorated, and then the ones that are not quite a flip. Right. They're in that kind of area of gray. Right. So those homes do linger at times. Believe me, I know, because I've had some of those where people say, well, I'll give a credit because the carpets are bad. No, folks, you don't do that. It's a major error. Now, we're coming up on a commercial break here. Do you know how much time do we have? We're minute, 30, a second? Okay. So I want to remind you, you're listening to the Real Estate PB&J Hour on Money Talk 1310 AM and 100.9 FM, or
moneytalk1310.com. We're going to take a short break and let the advertisers have their say. Be back in a few minutes.
Now back to the Real Estate PB&J Hour on Money Talk 1310 and 100.9 FM. Rosenwomble Realtor Paul Fuqua gives you the fundamentals of real estate selling, buying, owning, and improving your home.
Well, thank you very much for tuning back in to us here on a Thursday afternoon. It's, 5:20 or 5:21, something like that. And I hope that if you're on the interstates, that your passageway has been cleared and that the traffic jams that were out there have been eliminated. I also am fully aware that takes a lot longer than we'd like it to be. We were discussing what the pricing was and the consequences of the high demand that continues to be in existence. Kim, can you tell us a little more about what the average prices are, especially if we look at it now versus a week, a month or whatever?
Yeah, they have dropped. I'm sure, the rise in interest rates does knock people out of price brackets.
Right.
So in Norfolk this last week, the average sales price was $293,998.
Now these are just the houses that went under contract and pending status this past week. We're not doing year to year. This is this past week. How does that compare with the average, the standard average?
As year to date, the average in Norfolk was $332,891.
Right.
So that's almost $100,000 drop. Portsmouth $242,964 compared to year to date $239,645. Not as much of a drop there. Actually, a little bit higher for Portsmouth. Chesapeake this last week was $285,712. Chesapeake year to date was $421,062.
That shows
that's a big drop.
Huge difference in the market.
Let's look at Virginia Beach. Virginia Beach, actually, they improved. Average this last week was $315,164. And year to date, Virginia Beach was $452,946. We're seeing it in some areas, it looks like, but not in others. But we are seeing a little bit of drop in Suffolk, $312 this past week. And year to date, it was $388. So then again, we saw a drop in the sales. In Virginia Beach, we did too. It was $315 last week, and year to date, it was $452. So we're seeing a drop in all the cities over in all the Tidewater, Hampton area.
Well, that's kind of it may be aberrant. What you're seeing is the product itself is different. I mean, because as interest rates do increase, the buyer at the $400,000, he may back away.
Probably has to go down to about $350.
Yeah, and what you're also seeing is there are some people who are coming in and they're starter homes. Mm-hmm. They're not new construction starter homes. Their starter homes are condos or townhouses, which is a lower price, which is actually something we want to have happen because we have not had that.
The biggest drop was Williamsburg this past week was $279,550, and year to date Williamsburg was $511,098. That's a big drop.
Yeah, I think that's a direct consequence of very few houses. A lot of stuff in Williamsburg wasn't sold.
Right.
Gloucester, Gloucester went up, right? Last week, every house that they sold was average.
Last week went up. Gloucester, people are moving to Gloucester, I guess. Moving out there. Now, Gloucester is nice. Beautiful properties up that way, actually.
What does the Virginia Association of Realtors say anything? Do they say anything about what's going on?
I thought this was interesting. This is by Ryan Price, the chief economist for the Virginia Association of Realtors. And so he lists the top 15 local markets where everything is 3 days or less. And the number one was Craig County, where 50% of their homes stay on the market 3 days or less.
Where is Craig County?
I'm assuming it's got to be in Northern Virginia somewhere.
I grew up and went and lived in the D.C. area. I've never heard of Craig County. Yeah. I'm sorry.
The second one was Montgomery County, Lynchburg, and then Nelson County, and then Roanoke.
So those all got to be Western counties, right?
Right, and then Chesapeake came in at number 9 at 36.8% of their properties selling in 3 days or less. And Virginia Beach came in at 13 at 35% of their properties selling in 3 days or less. And Suffolk came in at 30.9. So we're holding strong.
I guess.
I'm proud of us.
Yeah, let's get us listed.
Yeah.
Get it listed.
Get it on the market. And then also he put out the sold to list price ratio of 105% or higher. The number one was Buchanan County with 77.8% of their homes selling.
Craig County is west of Roanoke, so it's down there.
Craig County, west of Roanoke.
They might have sold 3 houses there.
Yeah, that's why the stats look so good. Yeah. And then Chesterfield County was about 42% of their sell for 105% or more.
I wonder how the new Lego place is going to change that, because that was announced by Youngkin, the governor, a day or two ago, that the Lego facility, the state-of-the-art low-carbon footprint, is going in 1,800 jobs, $1 billion investment to build little building blocks.
Yeah, but those
don't
things,
step on them.
No, I know they hurt. I was glad when they came out with the bigger versions.
Anyway.
Hampton Roads didn't make that list, but what we did make was he put out a list for days on the market, 3 days or less, and 105% over. And Virginia Beach came in 7th with 12% of their listings selling in less than 3 days, 105% or more of their sales price. And Chesapeake came in at 11th.
Okay.
So we're standing strong, I think, in the state of Virginia.
Now,
it's a good investment to buy here. That's what that means.
I think you're absolutely correct.
Buy.
Yeah. Well, list.
Yeah.
That's what. Look, folks, this is an ad. I'm on here because I want your business.
I'm more humanitarian. I was worried about you.
No, that's not true either. We're real estate agents, and I know that we're a step above. Well, we may be a step below the lawyer, but one step above, I don't know.
We are above the lawyers.
We are above the lawyers.
We're above car salesmen.
Real estate agents are really very nice people, and I defy anybody out there in our listening audience to tell me that they don't know a real estate agent. That's our competition. My competition for listings is the circle of friends of prospective sellers. Because they have a friend, or they have the friend of a friend, or the daughter of a friend who has a license. And I think people have freedom to choose the real estate agent of their choice and go for it. All I want to do is get the opportunity to sit down with you and talk about what we can do and how we can market your property.
No, I think that we're very good at agencies. We are here to represent our clients. And I even told a specialist I went to one time, he was very young. I said, look at me. I know the laws of agency. I'm a real estate agent, and I represent my clients. So you need to act like I'm your mama and tell me the truth.
I can't imagine who's calling you mom. Anyway, all right, folks. Is it time for a break, or can we? Okay. Kim, you're going to introduce our special guest.
Yay. All right. Well, I met this wonderful young lady through Sarah, who they work for an insurance company. And I'll let them tell about their input for Prosper Insurance. And so her name is Alex Bird, and she's a business development executive at Prosper Insurance. She will be here to talk all things insurance. Prosper Insurance has helped their clients feel good about buying insurance for the past 11 years with top-rated customer service and sales agents. And she and Sarah, Alex and Sarah, both are top of my list. I love them because they're young, smart young women, and they know their field, and they present themselves very well. So I'm happy to have her here.
And you're going to have to move your mic over so that.
All right.
And then what you can do is step up with me, and we can share this mic for phone. And you're comfortable?
Yes.
Okay. Don't look at me when you answer. Look into the mic. That's the answer. Just. Otherwise,
my first time.
Oh well, you can't be nervous. Believe me, there's no reason. This is just imagine we're sitting at in your favorite restaurant over a glass of wine, and we're having a conversation.
Okay, very exciting.
But let me ask you a question.
Mm-hmm.
What are the basic coverages in a homeowner's insurance policy?
Okay, so for home, that's going to be covering sudden damage to your home. So. It might be easier to talk about what's not covered. So flood is not going to be covered under a basic policy. I'll touch on flood in a little bit because that's its whole own field itself. But that's going to be covering your home, the contents in it, liability for yourself and others that come onto your property. And that's going to be covered from fire, windstorms, any kind of storms other than flood, of course. Tornadoes and theft. So what's not covered, though, earthquakes, which we don't have to worry about that over here, so that's good. And power failures, neglect, so pests, you will not have coverage from that because that counts as neglect. So if a rat chews through your wires, that's not going to be covered.
That's on you.
Mm-hmm.
Okay. Now, let me ask you a question. You said storms, right? There's wind-driven rain and the damages to the side of your house. Is that covered?
Yes, so a lot of it too is on a case-by-case basis, because the second flood is involved, then that's kind of going to go a little bit different. But for a windstorm, if your shingles fall off, if your roof gets damaged, things like that. Tornadoes are also covered in this. But hurricanes is where it gets kind of iffy, because, I mean, just flood damage is crazy here. And a lot of people here are in a flood zone.
We're all in a flood zone in reality.
Yes.
It's just the rating.
High risk, yes. So, but 25% of all flood claims come from non-high risk zones. So
Really?
That's why it's so important to have flood insurance no matter where you are, if you are in the Tidewater area, and they don't call it Tidewater for no reason. So
let me get this clear. If I have a house and there's a big thunderstorm that comes through, and and there's hail, and it's the size of baseballs, and I go out and my car is damaged, and my roof is damaged, and my garden is ruined, what coverages does your policy, or does a policy
Yes,
provide?
so that will all be covered. Wind is its own. It is required and already automatically on Virginia policies because we have so much damage here from that. But yeah, hail is going to be covered. Your garden, yes, that will be, I guess, a little bit hard to determine the value of that, especially if you're already growing everything.
You haven't met my wife.
That.
I can show you thousands of dollars worth of garden stuff out there.
I just started getting into gardening, so I bet.
Just open up your pocketbook. Do you have a question? Yeah. All right, come.
So, how do you prove like you have a beautiful garden? So, should we be taking videos and pictures of everything that we own?
So for that, I mean, if you have the typical amount of things that you would expect in a home, so if you have one TV per room or just regular amounts of furniture, you don't really have to worry so much about taking inventory. Where you want to get into that is if you have a collection of things, if you if you have 10 Xboxes, you should probably take pictures of that so you can prove it. Otherwise, the insurance companies might not believe you. So I am a pretty organized person, so I'd probably take pictures of everything. I do keep a lot of my receipts. Now, there is a difference, though, between replacement cost and actual cost. So when you are choosing your insurance, you can either go for the actual cost replacement, which is going to not be as good as replacement cost, because replacement cost is going to protect you from the deterioration of the contents in your home. So nowadays, with inflation, if you are going by actual cost of a TV that you bought 5 years ago, they're going to give you a check for something you could buy maybe at the thrift store, a new TV. But if we're going replacement cost, then you will get the money back that you actually spent.
Well, one of the things that we suggest regularly is to make use of the virtual tour people that are out there. I know I've sent my guy who does all the photography for my listed properties and sent him in and do a virtual tour, so that he captures all the essence. It's not an expensive proposition. It is an expensive proposition, but it can substantiate what you have in a house. Now, how about detached? I have a detached garage, and I have collectible kind of collector cars in there. Not a lot of them, but enough that there's a sizable thing. If that, let's say, a tree falls on that garage and crushes those cars, does a homeowner's insurance cover the garage, the replacement of the tree, and anything on the cars, or is that my automobile policy?
So the garage is going to be covered under your homeowners. Right. Now, the cars, it depends on the age of the car. If it's considered a collectible car, that would be under, well, you can get a personal article floater policy for a lot of collectibles. Right. Now,
how much does that run?
Those
a rider?
Are relatively inexpensive for the personal article floater. We call it PAF. Man, antique cars, though.
Well, yeah, but basically, I use Haggerty or Grundy, or there are other specialty insurance companies that will handle that. And quite honestly, they'll insure a, quote, modern collectible also.
Right.
I don't own any of those, $300,000 Ferraris, but I know some people who do. Their policies probably costs as much as my car cost. Anyway, we've kind of gotten off the point. What else? I know I'm going to let Kim lead this conversation, so she's got to step up to this mic.
So everybody always asks me when they're buying houses, especially, is how deductibles. Mm-hmm. So when choosing deductibles, I know it also gives you some lower policies, but what do you advise people when choosing a deductible for an insurance policy?
So this is definitely going to vary per person. Somebody like me, I'm 26. I can probably afford, in the event of a loss, a $1,000 deductible. Somebody a little bit more established than me, maybe my parents, could afford a $5,000 deductible because they have their savings built up. So we really like to educate our clients on what they're getting into, whether a little bit decrease of premium is going to be worth a much higher deductible, because over time you really aren't saving too much money if your deductible is so high in the event of a loss. And I mean, there's a lot of losses going on, particularly with floods. So with flood deductibles, I would much recommend to do a $1,000 or $2,000 deductible, $5,000 instead of the percentage deductible. So a lot of these are going to be 1%, 2%, and 3%, and that's going to be much higher of a price than these $1,000. And you're not really saving that much on your premium.
What does that mean? Tell me what that means. Are you talking about 1% of the total face value of the when you say percentage?
Yes. So that is 1% of your home's cost. So that can get really pricey. You just want to figure out what you can afford in the event of a loss, and but we like to go through with each individual client and see what's best for them.
So the other thing that a lot of people ask me is about fences and decks. So is your fence covered in hurricane, tornado situations?
Yes, that will be covered. So a typical homeowner's policy, there's going to be a percentage that is put towards outside structures. So that's also including those sheds, garages, things like that. I'm assuming the garden would go under that as well, too.
So is that something you add on, or is that just automatically added to your homeowners?
Yeah, so that is going to be automatically in there. The only time that would not be on is in condo townhome situations. Sometimes if there's just absolutely no structures around, then you might want to take that away to decrease the price a little bit. But for the most part, it's always going to be on there.
And the other question about these detached garages, or let's say barns, people that buy properties that are on, acreage. So is there a rule of how close that detached garage has to be to the house, or can it be a mile down the road or half a mile down the road?
That is a great question. I know that there's completely separate policies as far as barns go, and it's going to factor in whether you're making money out of these structures as well. So that's going to be its own policy. Now, I know you're going to have an underwriter be coming out when you are getting insurance in general. So those pictures, people are going to take those Google images. Those are going to be a factor. So you're going to have an underwriter call you and say, hey, this is too far away. We can't really.
This is great stuff, but unfortunately, I'm anxious to get rid of or meet the responsibility to our advertisers to give them their time so we can get back on this. You're listening to the Real Estate PB&J Hour on MoneyTalk1310.com. Be back in a couple minutes.
Now back to the Real Estate PB&J Hour on Money Talk 1310 and 100.9 FM. Rosenwomble Realtor Paul Fuqua gives you the fundamentals of real estate selling, buying, owning, and improving your home.
Okay, this is Paul Fuqua. Welcome back. And if you're a new listener, I want to remind you that you're listening to the Real Estate PB&J Hour, dedicated to providing information on the fundamentals of real estate. You can listen to past episodes on our channel on YouTube at Real Estate PB&J Hour. We hope that you'll subscribe so we can build the numbers up. And you also can listen to us on the live stream at MoneyTalk1310.com. Now, if you have a question of me or Kim, my Pimento, my co-host, or Alex, our guest expert on insurance, homeowners insurance, please feel free to call us at 757-497-1310. Now, we were talking about coverages. and the importance of knowing what's covered and what's not. I'm going to ask a real quick question because it impinges on closings, and that is the effect of a named storm. If there's a named storm out in the Atlantic, and isn't there a rule that says you can't put in place an insurance policy on a new insurance policy if there's been a named storm in the past X number of days? Or is that?
Oh, I haven't heard on that.
Okay.
I know named storm is going to be very different than all other perils. So you are going to have certain times where you're going to pay out if it is a named storm versus if it's not. So that's where things aren't covered under your insurance if it is a named storm.
Okay. So because it was always you check with the homeowner's insurance agent or agency to be sure. That's my understanding.
Well, I've also heard sometimes that they won't insure, like if one's coming within the next couple of days, that they won't insure the home.
Okay.
Yes.
All right. So what is the time frame? If the storm is out there, it's in the East Atlantic, and so it's 10 days away, can you get a policy? If it's 5, you don't know.
No.
But you're going to find out.
Yes,
Okay.
I'm finding out. I'm live chatting an expert right here on the storm front.
Okay. Well, I know that I've heard that in the past, and so what little I know, I try and fill the holes in. Unfortunately, I don't have a big enough shovel. Now, flood insurance.
Yes.
Can a homeowner, when a new home, can he buy flood insurance through a regular carrier?
Yes.
Or
So
agent?
over at Prosper, we work with 5 private flood carriers. So FEMA is going to be required if you're doing an FHA loan. So anything government-backed, you're going to need a government-backed FEMA. Now, I think it's great to use private flood, though. We have some amazing carriers that we work with. And I mean, I prefer to work with those when I used to do customer service over at Prosper. Then I much preferred when they had the private carrier, and we only work with ones that are A rating and either meet or exceed FEMA's requirements.
Right. Okay.
And also, I got the answer for the storm. It's going to be about 2 weeks ahead of time. So, and it depends on how severe it is as well.
So if there's a named storm and it's a category X, whatever, 4, 3, but it's out there, and we know that it has the possibility of hitting us, you won't write the policy. So
Yes.
watch out scheduling close if you are a purchaser. And if you're a seller, be aware of that. Because unfortunately, it's one of those things like interest rate. We can't do anything about it. We can't worry about it. So it's the weather, It's we just have to make certain that we are ready to respond.
Which is very scary. And one time I bought a car, I was 5 days off the lot, and it flooded. And there was nothing I could do about it because the storm was so severe that they just couldn't handle all of the claims. So you really never know what's going to happen. But it's scary out there if you don't have if you can't add on the storm.
Okay, this is a question that I've had, especially in property management as well as in resale. We have a lot of big trees here, a lot of big trees, and they get overgrown, and people don't want to cut them down because of the cost. I don't know if anybody's priced the cost of cutting down a large tree, but it can be quite expensive. So, if your neighbor's tree falls on your house, whose insurance?
It is your responsibility.
Are you serious? Our
Yes.
responsibility?
Yes.
Okay, this is another trick I heard. I've actually written the letter before. What if I write a letter to the neighbor telling them that I'm afraid of that tree, that it's going to fall on my yard?
Oh, okay, going that way. Well, see, the reverse, if it's your home and you have that tree, you can most certainly write a letter respectfully alerting your neighbors that you have a tree that might fall on you. You can also call the city and let them know too. Now, if your tree does fall on the neighbor's home and they haven't done anything about it, they don't have, insurance for some reason, then, that's going to count as neglect on their part because you did your best to alert them. And then also if you're alerting the city as well. So it does fall on whoever's house that it's on. That's whose insurance is paying for it.
So it doesn't matter if a huge tree across the street falls on your house, it's your
Right.
responsibility. Wow.
And something a lot of people don't realize when they're first buying a home is that you are going to have underwriters from these carriers come out and assess your home, take pictures, and if you have tree branches above your home, they are going to require you to cut them down a lot of times, or they'll cancel coverage after about a year.
Right. You know, when I bought my house is older, and it has an old glassed-in porch in the back, and it was sliders. And they required, even though they locked, and I took videos of me locking and unlocking the locks, they made me put those bars on the sliders
Wow.
before they would insure my house.
Yeah, they can be very particular. So, but you got to listen to them or reshop.
Right. So you mentioned that you know some ways to save insurance. I mean, save money on insurance. Save insurance. Okay, save some money on insurance. So what are some tips that we can have for our listeners?
Yes. So my number one thing is never just go with the first estimate that you get. So you're going to want to shop around for sure. We have 30 different carriers, so we like to do shopping around for our clients. Now, another thing is bundling home and auto will save you lots of money, especially in the long run. I would really recommend going away from maybe some insurance that maybe you've been with for 20, 30 years and just trying to see what else is out there too, because you never know, you could be saving thousands of dollars by shopping around. Another thing is a lot of different carriers will accept alarm certificates, and you can save money that way. So showing that you have an ADT security system that's working, that will help. This is going a little bit more into auto, but this is great if you are bundling with your teen drivers. A lot of people don't realize how expensive that your policy will be if you add a teen driver, but there are good student discounts. So if your child has, I think, above a 3.0 GPA, then you can get money off that way. And you can have like a little tracker in your car that tells you if you're a good driver or not. It tells the carrier, and then you can save money. So if you don't really drive your car very often, it's just staying parked in a garage, this is a great thing to have because you'll save lots of money that way.
What is the biggest mistake a homeowner can make in dealing with an insurance carrier on a claim?
I would say not shopping around and just
I'm talking about a claim.
A claim. Okay. That's a great question. So a lot of people call in before they get estimates on the damage. So they will call into their carrier and file a claim, and not realizing that even if it's not covered, or even if their deductible is higher than the cost of actually fixing whatever is damaged, that will still go on your record and it will affect your premium. So we like to say always call somebody to inspect the damage. This goes for auto too. A lot of times it's cheaper just to go ahead and replace something yourself, so it's not counting against you in the future, because the price of your insurance is going to be determined on claims as well. So they definitely take that into account. So I would get an inspector out. And what I love about my company too, I'm just plugging in Prosper a lot because I just love my company so much. We have a claims department that will advise whether you should file a claim or not, which I think is amazing, and not a lot of other companies do that. So we have advisors, not experts, that recommend whether you should or should not file a claim, and I think that's great. And if you don't know, you can always ask, but you need to specify, I'm not filing a claim, I'm just asking a question, because otherwise it's going to go right on your record.
You mentioned earlier about negligence. If there, and I have to assume that if you had allowed, for lack of knowledge, a long-term water leak that severely damaged your property or your home, that could not be covered because of the negligence and that you didn't discover a long-term leak?
Exactly. So sometimes maybe the pipes will still be covered, but nothing else that was damaged. So that's why when you're purchasing a home, it's so important to have a great inspector come out and make sure that you have that you're hitting all those points too. And there's also a lot of different. You can have other people come out and really assess certain things, certain experts in inspecting the home. And then there's also different coverages you can add onto your policy. So there's a hidden water coverage and a water sewer backup. lots of extra things like that can help you. So that's why you really want to stay educated and make sure you have a sales agent that is very educated and will walk you through everything too, and that you can ask all these questions too.
Okay, so yeah, I'm kind of surprised. I didn't realize that the water damage was, you could put a rider on a policy. That's amazing, especially in older properties. Now, what we suggest in my office is that people consider their home the equivalent of a machine. You take your car in, you have the oils changed, and the brakes are checked. And in Virginia, it has to be inspected once a year to make certain all the lights work. And my suggestion is follow that lead on a 5-year basis on your home. Get a home inspector. It's not going to be prohibitively expensive, and they have them inspect the house as though you were rebuying it, so that you can determine if there is one of those long-term water leaks.
Yes.
I mean, I had a house that had a deck on the second floor over living area below it, and it was a bladdered deck. And then on top of that was the actual decking that floated. And it burst. It created, there was a leak, and the leak wasn't long-term because there'd been no evidence. And we awoke one morning after a horrendous night of rain to find that there were thousands of gallons of water that had come through the deck and through the ceiling and ruined 3 rooms in the back of the house.
Jeez.
It was about an $80,000 claim. Now, what about chimneys? Should we have a chimney inspected on a regular annual basis?
Yes.
You have 2 minutes to answer that question.
Yes, you will probably have an underwriter when they come out to inspect your home say we need to make sure that you have your chimney inspected. I don't think all carriers are going to do that, but a lot of carriers do care, just since it's a fire hazard, and there's a lot of hazards that can come from that as well. So.
Okay. All right, Kim, do you have any more questions? We got the chimney covered.
Yeah, well, I was just thinking that because, of the fire, and that seems like these older chimneys, and now the inspectors are getting to do all these levels of chimney inspections. I'm just wondering if that was being required more, especially for the older homes, that we have. So the only other question I have is, at some point, your car is insured and inside your house, so like your boats and things like that, but you should also have separate policies for everything really that you take away from your home and want to insure, like your boats and your cars and your motorcycles and things like that, correct?
Yes, so you're going to have a separate boat policy, and then also the personal article floater policy that I mentioned. That's going to be your jewelry. That's going to be any collectible items that you have, firearms. Your typical homeowner's policy will only pay out so much for those things, so you want to keep the receipts for those items and get them appraised. And personal article floater policy is very affordable, but well worth it to have.
All right, thank you.
It's been a great pleasure having you here, Alex, and I appreciate the information you've brought forth. Folks, go ahead and give us your name, contact information, company.
Okay, great. So I'm Alex Bird with Prosper Insurance. If you would like to give Prosper a call and get a quote, you can call 757-248-5973. Tell them Alex Bird sent you from the radio, please.
That's I like that. It's the Real Estate PB&J Hour. Now, we've got about 3 minutes to wrap up. We've covered insurance to a certain degree, and I think it's beneficial. All of you who may be listening to us here on Chevy Talk, Money Talk. There goes the cars. Sorry, guys. Money Talk 1310. We hope that you're benefiting from this little show. We hope that you will go back and visit us on the YouTube channel at the Real Estate PB&J Hour. And please, at no cost to you, just go ahead and subscribe to the channel. I promise that you won't get any spam phone calls, and we won't get any calls from the warranty company on your car. By the way, I would like to have the software that those people use, because they can track you down anywhere. I must get 2 or 3 calls a day reporting that, well, we have found that your car is out of warranty. Well, I guess it is. It was built in 1931, for God's sake. So the warranties then were you knew the mechanic or you didn't know the mechanic. So we want to go over what we're going to be doing next week because we really don't have any ideas at this moment. We know we're going to have somebody. We're going to have Ellen Drames, Rose and Wamble agent, who's the cow lady. She's received all kinds of national recognition for her ability to market herself in Suffolk. She's pretty spectacular and has always been an industry leader. I enjoy her company.
That's right. She's
much.
Holy cow, are you ready to move?
Yeah, holy cow, are you ready to move? And she's a genius in that regard. Her shtick really works, and it shows up in the number of people that she's able to help. And we want to thank you for joining us again at the Real Estate PB&J Hour, and we hope you enjoy it and that you learned a little more about the market. My closing remarks will center on trying to avoid the panic or the doom and gloom that the soothsayers of the media are throwing out there about interest rates. It's not the end of the world. We've seen worse. We have a strong real estate market here in Hampton Roads, and what can be done at any time in the future is to refi a property if you want it and it meets your needs, and you may have to stretch your budget a little bit because of the interest rate. This is Paul Fuqua. Thank you very much. Tune in next week, moneytalk1310.com, Money 10 1310 AM and 100.9 FM. Thank you very much for listening.
Thanks for coming.